So Donald Trump ran the second time around on a proposal to end citizenship-based taxation for Americans living abroad. And now he's coming out with a policy that potentially double taxes citizens living abroad. A lot of these proposals can be very confusing to read through, and I want to talk about one that recently came out today. And we'll talk about a little bit how I look into these types of policies and potentially how it can affect international tax, taxation of expats abroad, and in general, what we can expect. So on January 20th, Trump put out a memorandum that set out the guidelines for his America First trade policy. And basically what that did is it outlined they're going to evaluate existing trade agreements that they have. They're going to look at trade deficits and started to investigate why we have those and what we can do about it. But one thing that stuck out to me as a tax person is there was one particular article that talked about Section 891 of the tax code, which has never actually been implemented before, and that caught my attention. Specifically, what it reads is, the Secretary of Treasury shall investigate whether any foreign country subjects U.S. citizens or corporations to discriminatory or extraterritorial taxes pursuant to Section 891 of the U.S. tax code. This small sentence in this overall outline gives the president and the Treasury a really big power as far as tax policy goes. So basically what Section 891 does is it says that at the president's disposal, they can decide whether a country is discriminating against U.S. citizens in the way that they're taxing them. And there's a lot of things with tax policy going on out right now with how foreign countries are taxing international taxpayers. So this can apply in a lot of countries, and especially if Trump feels like we're getting the raw end of particular trade discussion. The way that Section 891 works is if they do determine that a country is discriminating against U.S. citizens from a tax perspective or U.S. companies, what it does is it allows the IRS and the Treasury to tax people from that country or U.S. people in that country or people coming from that country to tax them at twice the normal tax rate. So I'll give you a quick example. Let's say that the Treasury decides that there are some unfair trade practices going on between the U.S. and Canada, and that Canada is unfairly taxing U.S. corporations and individuals there. They can invoke Section 891 under this America First trade policy to say that any Canadians coming to the U.S., individuals or corporations, are not going to pay the 21% corporate tax rate in the U.S. They're going to pay a 42% corporate tax rate in the U.S. under Section 891. And it also would impact U.S. people going to Canada, because we have a citizenship-based taxation system where those U.S. people in Canada are now going to be taxed at twice the tax rate in the U.S. So instead of a top marginal tax rate of 37%, they'd be taxed at a rate of 74%. The way that would work out practically, let's say for an expat, is if you went to Canada, and I'm using Canada as an example, obviously this isn't the country that they've targeted necessarily, but in my example, if they moved to Canada as a U.S. citizen and they invoked Section 891, that U.S. citizen would be paying Canadian taxes, which is already high. So you would say, let's say that's 30% in Canada. The normal tax would apply in the U.S. and you would get a credit in the U.S. for the Canadian taxes. But if you're paying the 74% rate in the U.S., you would pay 30% in Canada, get a credit against that against your U.S. taxes, and pay this higher, the difference in the U.S. So 74 minus 30. So you pay 44% tax in the U.S., 30% tax in Canada, and that would basically make you leave Canada. And that's the goal of this trade policy position in the first place. Is unfortunately that's going to fall on these American taxpayers necessarily, or foreign businesses coming here paying higher taxes, but it's just going to discourage you at the end of the day. Nobody's going to move to Canada and pay 74% taxes. It's just going to stop you from going there in the first place. And that's the threat. And in my personal opinion, you know, we've already seen 4 years of Trump, and that's kind of how he operates. The way he negotiates is going really hard on one side of the spectrum, or obviously in America's favor side of the spectrum, as far as his idea of what trade policy looks like. So if he thinks America's the best interest for a particular policy for a country, he's going to have all these options to make it really bad for the foreign country. And then from a negotiation perspective, they land somewhere closer to where Trump really expects them to be. So I don't really expect Section 891 to be implemented. It's in the tax code. It's never actually been implemented before. I think it got set up in 1934, which is right after the tax code was created, but it's never been implemented before. I don't expect it to be implemented later. I think it makes for an interesting article if you read things online out there about how Trump's going to double tax the citizens abroad. It gives him that power to do that. He unlikely will, and it's really a negotiation strategy from my perspective. We'll have to see what plays out. I could be completely wrong, but it's worth noting that these little things get buried into these policies. Could have a big impact on businesses and Americans that are operating internationally. If you're enjoying this video, please like and subscribe to this channel as I have more information out there, especially as this new administration comes in and starts making changes to the tax policy and trade policy. I'm going to try and keep you updated on how this could affect international business, international taxpayers, and expats in general. If you have questions about your international tax situation, please reach out to us at McGowanTax.com for a free cross-border tax diagnosis today.